falls 51 points for SGX. So SGX again is really one of the worst markets in the region. 50 to 61 for SGX. There you go, down by about 1%. Subir Gokarn, former RBI Deputy Governor and Director Research at Brookings, joins us from New Delhi. Mr. Gokarn, good morning. Thank you for joining us. The measures announced by the central bank to add liquidity into the system haven't quite had the intended impact. What to your mind has spooked the markets? Is this the policy flip-flop?
No, I think there is a consistency in terms of what was originally intended, because on July 15th, the idea was to raise the short-term rates to, as I said, restrict or contain speculative pressure, so that people essentially wouldn't be borrowing short-term to go long on the dollar. And at the same time, the idea was to try and insulate the long end of the yield curve from this liquidity tightening. So what the Fed called Operation Twist some months ago, raise the short end but lower the long end. Now, obviously, as we saw after the moves were announced, the long end was not so amenable to being controlled. The yield spiked, they went up right at the beginning, and in the last week there was a sharp spike. So this was in a sense a response to that pressure, which was that in the original scheme you needed to see long end rates at least stay where they were before, but when they started to go up very sharply, you needed to do something to achieve that objective, and that's what was done yesterday.
Mr. Gokarn, the market has been dismissive of all the efforts taken by the government and the central bank to rein in the rupee. What would you attribute this to?
I think the basic issue here is that you cannot address what is a fundamental problem, what is a structural problem with the short-term temporary measures. The problem is structural because it is essentially stemming from the very large increase in the current account deficit. The trigger for these moves was obviously the announcement by the Fed that it would start, the US Fed, that would start tapering sometime in the next few months, this year or next year. Expectations obviously now building that it will be sooner rather than later. But that was a shock that changed the pattern of capital flows completely. And so when you got this very large vulnerability, which is the current account deficit, and what was financing it starts to weaken, which is the capital flows, obviously the currency is going to behave exactly as it has been, which is that supply of dollars is falling far short of the demand for dollars, and the price of the dollar is going to increase. Now, if you don't address the fundamental problem, which is the current account deficit, and you can't obviously do that overnight, a lot of efforts are being made on gold and things like that, but there has to be a strategy, there has to be a sort of a broad-based effort to address it. That's the only way that some sort of enduring stability in the currency is going to be achieved. And at this point, we don't seem to be heading, very clearly in that direction, so that the vulnerability of the currency remains very, very visible.
Right, Mr. Gokarn, you spoke about cues from Fed, and all eyes are now on the minutes of the Fed meeting. What are you watching out from there, and have markets really priced in the fact that Fed will start tapering come September?
I think it's a little difficult to reconcile all of these dynamics with that's a very rational view of markets, which is to say that they should have priced all of these things in right at the beginning, and we shouldn't have seen the initial asset boom to begin with. But that's not what happened. So we saw the liquidity pressure cause an asset price boom. Now we've seen the withdrawal of it causing asset prices to readjust, and when as it comes closer, there is even further adjustment. So I think what this reflects is that post-crisis, and this is just one possible interpretation of these events, is that investment horizons became very short-term. You weren't looking 1 year, 2 years, 3 years, 5 years ahead. You're looking a week, a month, a few months ahead. So as long as the prospect of getting returns from liquidity was there, everybody's rushing in. And now that that prospect is starting to taper off, at least these short horizon investors, which I think have dominated the market for the last few years, are starting to withdraw, starting to exit. And that is causing this turbulence in global markets. The long investors are presumably there. They presumably have priced in the withdrawal of QE right at the beginning. and so there is some stability that comes from that. But the short horizon investors, I think, are basically now contributing to this instability, and that's what we're seeing play out both on equities and on currencies.
There is a contra view that the government is better off actually letting the rupee sink and let the market determine its value and focus on fixing the economy for now. Does that make sense to you?
I think as long as it's emphasizing the fact that the structural responses are significant, credible, realistic, and are aimed at addressing the right problems, you can complement them with the short-term measures, or maybe, as the argument is going, well, then that will take care of itself. It's a difficult judgment to make whether one alone works. But if you had to choose between the two, if you had to choose one between the two, I would obviously argue that the structural changes are far more important. Without that, nothing else is going to work. You can then, given the circumstances, choose to combine it, complement the structural changes with short-term measures to reduce volatility, and I think that is really the combination that should be tried. But one by itself, just the short-term measures by themselves, I think, as we've seen over the last 4 weeks, at least the perception is that they haven't worked, and the perceptions are very important in this kind of situation.
So finally, what can potentially turn the sentiment? Do you think a diesel price hike is something that should send a strong signal across?
I think, as I said, there are 4 pressure points on the current account. The fuel price adjustment, which also has a fiscal dimension, is an important one, and surely any increase in the pace of correction of the fiscal subsidy will have an impact. But I think we've got to widen it. It cannot rely on only one change or one response, because it's a deep problem, it's a wide problem. It's not just defined by one parameter or one indicator. So we've got to see moves on all of these things. So what are we going to do to the steps that are being taken, whether they will actually have an impact over time or not, I think is something people will wait and watch for. But action is important as a signal. And I think on iron ore and gold, on coal, again, what have we started? We know that we can't, it's not going to change overnight. It's not going to change tomorrow. But are we taking any visible and credible actions on both these fronts? I think we have to address it across the board.
Okay, Mr. Gokarn, leave it at that. Really appreciate you taking the time out and speaking with us today.